If you're seeing this video, hopefully that means you haven't paid for an operating agreement, because you definitely don't need to. It's one of those charges other companies sneak in, like the courtesy charge to buy movie tickets online. Courtesy for who? Northwest will give you a template for free, and we're going one step further and explaining how to fill it out. To be clear, not free if you become our customer. Free as in, you can just go download it right now, but you might want to watch this first. The operating agreement is an internal document, meaning you don't need to file it with the state, but it will come in handy when you're trying to open a business bank account. You could also think of it as the laws for your LLC, which can come in handy if you decide to take on a business partner down the line. We'll be honest with you, there's not much to fill out, but we'll also decode the legalese our fancy lawyers penned into this document so you know what you're signing. And the big blank on top of the form, write in your company name. Simple enough. Article 1 affirms that the LLC has been or will be formed with the state, lists key business information, including the situations that can end the business. Basically, you decide to end your business or your business breaks the law. This also explains how to add more owners. Because the operating agreement references your formation documents and other sections of the operating agreement for this information, there's nothing to fill out. Article 2 is all about your buy-in. Even though you're the one creating the LLC, you'll need to fund it with money or other assets in exchange for your ownership interest. You'll need to list the total value of your contributions in this section. You'll calculate that total in Exhibit 1, so let's skip down there. Here you can list the money and other assets along with their value and calculate the total. List that amount in the blank of Section 2.1. The next article explains something we think you'll find pretty important: how and when you get your money. Profits and losses are determined and allocated annually. After you pay expenses and any liabilities, you can make distributions at any time. Woohoo! Since this is a single member LLC, you're in charge. Article 4 spells out your powers, and of course, with power comes responsibility. This article also notes that, assuming you've acted in good faith, you're not personally liable for losses or damages to the LLC or expenses resulting from lawsuits or other actions against the LLC. So be the person your dog thinks you are, and your LLC will be there to protect you. Keeping separation between yourself and the LLC is important to maintain your liability protection. That's why Article 5 notes that if you incur an out-of-pocket expense or render a service to the LLC, you may be entitled to reimbursement or compensation. I mean, fair is fair, right? The next article explains how you'll keep financial records, including capital and distribution accounts. At the end of each calendar year, you'll close the books and prepare a member statement. Yes, that's just for you, but these types of records are important, like business self-care. Article 7 is a little scary, but it's an important precaution. In a worst-case scenario where your LLC is sued by creditors and they are awarded membership interest, so partial ownership, this article says that this interest does not include their right to participate in the management or operations of the LLC. They would only get distributions, not a say in how you run your company. The last article notes that, should you dissolve your LLC, the LLC is responsible for paying debts before making any distributions. After this, you'll find the signature page, which you sign to acknowledge that you agree to the terms of the operating agreement. Best of all, anytime you're wanting to make a change within your company, you have a handy document that will show you how to handle it properly. Hopefully that was pain-free, but best of all, it was free.